we're super excited to be here with everybody. Obviously, a lot going on in the markets, Helaine. There's a lot to be really excited about. Things are moving in the markets. It's a really exciting time to be an investor. Obviously, just talking about last week, we just saw, pretty much across the board. We had stocks breaking out to new all-time highs. Just last Thursday, I'm sure many people probably caught this, but we saw all four of the major indexes here in the U.S. Both the Dow, the S&P 500, the Nasdaq, even the Russell 2000, all four hit brand new all-time highs. Particularly notable for the Russell. It had been several years actually since they had made a new all-time high. So seeing that happen on Thursday was really, really significant. And then again, on Friday, in Friday's trading, we also had three more new all-time highs on the three major indexes, the Dow, Nasdaq, and S&P 500. So really, really encouraging stuff that we're seeing there. Of course, this is all highly connected to the rate cutting narrative. We saw stocks
Hmm.
rally pretty substantially into last week's Fed meeting. The market had been sniffing out that rate cut for quite some time, really several months up in advance of that. All the macroeconomic data had started really to confirm that a rate cut was on the way, and it was kind of really the only option that the Fed had. So the market seemingly knew it was, in those weeks leading up to the Fed meeting. You don't often get the market saying there's 100% certainty of anything.
No,
Uh, but
no.
regarding a rate cut, that's exactly what the market was saying heading into that. If you're tracking the CME's Fed Watch tool for, really about 3 weeks out from last week's Fed meeting, it was saying, we are saying with 100% certainty that there's a 100% probability of a rate cut happening at that meeting. It's exactly what happened. The market called it. They called their shot. It's exactly what happened. And, so it was great that the market didn't get a surprise there.
Yeah.
That was the real key thing, is that we needed to have that rate cut because so much of the rally had been built on that. A lot of those interest rate sensitive pockets of the markets had rallied quite a bit on it. So it was great to see that. And that's continuing to propel stocks into this week. I mean, just yesterday, again, we saw just a massive move higher, in the S&P. Some of that, of course, was, linked to, one, Apple and Nvidia, the two most heavily weighted stocks in the index, having a substantial outperformance yesterday. I mean, I know Apple was up something like 4% yesterday.
That's
They're having a really
crazy for Apple.
successful, yeah, I mean, 4% move in a day for, stock like Apple. That's just, you don't plan on that, but when you get it, of course,
No.
it's going to have an outsized effect on the indexes. So, you know, some of that move was, some of the, remnant buying, again, just based on last week's rate cutting news, seeing a rate cutting cycle likely kicking off. But then again, like I said, Apple's had some really great news with their recent iPhone launch, and then Nvidia had some exciting news yesterday too, partnering up with OpenAI even further. So a couple of those really great news headlines, continuing to, fall in favor of the bulls, continuing to add some more, gasoline to the bullish fire powering this market. So, overall, lots of things really going, right for stocks. There's certainly some risks out there on the horizon, but there sure is a lot of things falling in favor of the bulls, and in the case of continuing to propel stock prices higher. Now, of course, right here we always like to start off just looking at a chart of the S&P 500. Just kind of take a temperature of the market, see looking from the 10,000 foot view what the indexes are doing. Of course, we can see the huge pop that we had just yesterday. Might actually help if I zoom in just a little bit here. Sorry, let me tighten this chart in just a little bit to the last 5 months as opposed to the last year. We all know the
Yeah.
market's been doing quite well over the past year, so let's go ahead and zoom it in. So, Helaine, one thing we've been talking about, really through a lot of August, we got several new all-time highs on the S&P in August, but
Hmm.
just marginally. It wasn't like we were having a really expansionary, type of trading. It was really kind of staying tight in the range. But then we started heading into September, and people were, saying, "Oh, the seasonality. Oh, the
Yes.
markets have to be, not great in September just because it's September." And you and I were saying, well, there's some historical precedent for that. It hasn't been historically the best month for stocks, but it doesn't mean that that's how it's going to play out. We were saying that all through August and September, and we were saying, that just because of historical seasonality trends doesn't mean that we're going to get, a poor performance in these months. And, we're in a really strong bullish trend right now. So we could, finally see a breakout. And that's exactly what we saw happen over the last couple of weeks. You can clearly see that in the charts right there. Just there's probably 10 new all-time highs that have been made over the past, couple weeks in the S&P. But, drilling down a little bit further from that, what else are you seeing in this chart right here? Of course, the trend's great. The trend lines look great. New all-time highs and higher lows. But is there anything else that you're seeing in this chart right here we should take note of?
No, I mean, I think it's important to know, of course, that we're overbought at this point. We're trading above, you can see SPX is trading above the upper Keltner channel, and RSI wise, RSI is currently at 79, it looks like. And so clearly in overbought territory today, pulling back off of that high, totally normal, totally to be expected after a push like this higher. But, it is interesting to see as we've seen this breakout since the rate cuts, where we're seeing this breakout occur. And I can't help but look at these really risk on sectors. Like I was looking at the quantum stocks. Oh my goodness, they have
Hmm.
taken off. So we are seeing one of these rallies where it is full risk on. We're seeing some to the moon movement, as
Yeah.
you might
Yeah.
say. But it's interesting to see that because, as you said, going into this period of time, August, September, I was bracing. I was just like everyone else. I was nervous. I wasn't sure what was going to happen. Nobody knows, with any certainty. But, just seasonally being unsure and a little hesitant, and then to have one of like these crazy rallies like we're experiencing, it's great. I'm loving it. My account's loving it. I can't lie. But
Yeah, absolutely. Yeah. No, it's definitely been a great past month, for equity investors. If you've been long, it's definitely been some nice performance. But, I guess the key takeaway here, Helaine, is that, over the past really 3 weeks, we've covered a lot of ground in the markets. We've gained a lot of ground. We were kind of, as we had pointed out clearly before, we were kind of stuck in that range with a ceiling of resistance, right around 6,500, come, about midway through September, we finally clearly and definitively broke out above that. We've gained a lot of ground. The last two trading days, we popped above 6,700 now on the
Mhm.
S&P 500. So, we haven't closed above it yet, but we've traded right up to it and found some resistance at 6,700. So that 200 point gain on the S&P, that's a very significant gain. You can clearly see the acceleration of the charts. We've been trading outside of the upper Keltner channel band for, almost 2.5 weeks now. We're closing in on 2.5 weeks worth of trading days being outside of the upper Keltner channel band there. So it's certainly been in that short-term overbought territory for quite some time. Now, pretending out, projecting out for the, medium to long term, it's very encouraging. Seeing these, seeing the index break out to new all-time highs, it's not happening on accident. It's not just, a blip on a chart. It's not happening for no reason. It's very encouraging for the long term seeing that, but just at least in the short term, we're definitely getting some technical signals that at least at the index level, stocks are getting a little bit overheated in the short term. That's
Yep.
clearly shown again by the index trading outside the upper Keltner channels. As you pointed out, Helaine, the RSI, it's still overheated today, being above 70. Yesterday, it almost went up and touched 90, which is just a scorching red hot reading on that one down there.
Mhm.
So, we're likely due for just we're not saying we're having a big correction or any type of sizable pullback, but just a little bit of a cooling off, a little bit of consolidation, get back inside of those Keltner channels, just, maybe back down to 6,600 or so, 66.25, somewhere in there, just, allow some cooling to occur, have a new dip to encourage some more buyers back to the market, things like that. That's probably what we're trending for because, ultimately you can only trade in that overbought territory for so long. So, we still do have a little bit of a cautious approach regarding, just broadly new entries right now. But there certainly are still some pockets out there, Helene, where there's some interesting opportunities. And anything else you want to add onto here before we go ahead and hop into those, current good-looking opportunities in the market?
No, I think we're all set to jump into those opportunities. As you said, even though things are overbought, there's still buying opportunities out there right now. And I know we both found one today.
Exactly right. Yep. So yeah, while we have a long-term, medium-term, really bullish outlook on the index, at least in the short term, we're expecting the indexes to probably come in a little bit, over the next week or so. We do have a big catalyst at the end of the week with the PCE inflation report. I anticipate people are going to be starting to position and be really highly focused on that heading into Friday. But That said, there are still some really attractive opportunities out there in the market. The last time we got together, last Thursday, Helaine and I, we kind of laid out our playbook for the remainder of the year and kind of next 6 months, next to year in the market. And we talked specifically about some of the sectors that we felt were very, very well positioned to continue to trade well over, the next, short to medium to long term outlook for the market. And one of those was technology. We feel technology is really well positioned to continue to be a market leader as long as this bull market continues to run. And so that's one of the reasons I zeroed in on this trade right here today. This is Cloudflare. They're a major player in the cybersecurity space, of course, obviously a technology software play. That's kind of how they're, slotted in the markets for, sector speak anyways. But you can see a very clear, strong bullish trend in Cloudflare right here. Again, the ticker is NET. And so you can see this is just looking at the past year worth of trading for Cloudflare. Very strong uptrend going from the lower left to the upper right. You can see about a year ago, the stock was trading around 80, 85. Now it's all the way up to about $222 per share. So just a massive move higher in this one right here. Again, it's, has broken out on several occasions recently to new all-time highs, making a nice series of higher highs and higher lows. Of course, we have a great trend line buy signal going on here with our 21-day EMA trading above our 63-day EMA down here. And of course, that was when the buy signal initiated coming out of those April lows, got that crossover in early May, and the stock just took off, was off to the races after that. Now, again, even though overall, currently the tech sector, if you pulled up the chart, say of XLK, the tech sector as a whole looks a little overbought and short-term frothy right now. Of course, we discovered that the market itself at the index level also looks a little overbought. Punching down just to this, individual stock right here, not necessarily the case. You can see that even though in yesterday's trading, Cloudflare actually closed at a new all-time closing high. That's an incredibly bullish sign. It's pulled back just a little bit in today's trading, had a little bit of a wide range, but you can see it's trading well within our upper Keltner channel band right there. You can see it's trading, about call it just roughly halfway between the upper and middle channel. So this one is clearly not overbought according to the technicals right here. Still really incredibly bullish, strong trend underlying Cloudflare right here. And so the way I'm actually looking to target this one right here is with a call option debit spread. It's an in-the-money call option debit spread. I'm looking at the October 17th monthly option expiration. And specifically these two options right here. So looking to buy to open the 200 strike call and sell to open the 210 strike call. You can see here's our spread set up on the order right here. And I think I'm actually going to go ahead and place this order too. You can see it's currently coming in about 7.47 points. So, a pretty great profit potential offered on this trade. If you're able to get in, at that price, I would just be trying to get in below 8 points just to guarantee that I have at least that 25% profit potential. But again, just to show you on the chart where this is, here is where the strike is we'd be selling, and here's the one that we'd be buying. So as long as Cloudflare stays above 210 per share, it's at or above that come option expiration, that's when this trade would realize its full profit potential. So it looks like we have just a tad bit of a wider range here. So I'm going to go ahead and enter my order at, call it 7.65 points, just to give me a little bit higher likelihood of getting that trade filled really quickly. And there you go. Got it filled right at my limit price there for the trade. So got that one filled. And so that was the opportunity I found in today's market, Helaine.
I
So
really like it. Yeah, I really, really like it. Really strong chart. Tends to be one that performs well, especially in the current conditions. So I really
yeah,
like that trade. And
appreciate it. Thank you. Yeah, I'm excited to see what you have as well too. When
yeah.
you get these overbought markets, it's even more important to fall back on, your technicals, your, time tested strategies and systems that find you good entries, because, when things are overbought, you can't just throw a dart and hit anything that's, has a really high likelihood of starting to rally in the short term. So I'm excited to see what you have here.
And before I jump into my trade, real quick, I did want to highlight my trade from Thursday. I had said that I really liked where Lowe's was at, and I wanted to enter a call option purchase for them, and that's exactly what I did. Here I am, what, 3 trading days later, and I have a 25% return on the position. So
That's awesome.
I'm
Look at that.
happy with that. I'll take that. I'm going to exit that one today. But I did want to just show you that, we do take these trades oftentimes that we recommend here. And, we like to share that they, when they are performing well and working out. So here's one that, just in a couple days' time had a quick 25% return.
That's awesome. Yeah, I know the meta spread that I recommended last week is doing pretty well
Yeah.
so far too. I know that one's continued to break out a little bit higher as well. So yeah, always love to see these trades that we share here live in TOD Live continue to perform well. So great trade there, Helaine.
Appreciate it. And so now here's the trade for today. It is for Expedia. And so as you can see, this one it had a rough 25 or the last 12 months. I'm not gonna lie, it was a little bumpy, but it started to show some real signs of life and the sustained
Hmm.
bullish trend around, late April, early May of this year when we started to see settling out in the stock and some more consistent trading, specifically in a series of higher highs and higher lows, as well as these new 52-week highs. Um, Additionally, we saw a technical bullish signal, buy signal here in this mid-July timeframe when we saw the 35-day EMA start to trade above the 200-day moving average. This confirms that there is strong momentum in the stock in the short term. So we want to see that shorter term 35-day EMA trading above the 200-day moving average. And additionally, we want to see the stock trading above both of those. So that's what we started to see right here in July. And since then, we've seen that trend sustain. And really, since that crossover, Expedia has taken off. I mean, around that time, they were trading at about 180. Now they're all the way up to 225. So we saw a surge higher here in late August, and then we saw a series of higher highs since then, where the stock traded consistently around that upper Keltner channel, something that only stocks in very bullish trends do. And right now, we saw a retracement to the middle of that Keltner channel and then a bounce higher. So yesterday, we saw it closing in on that middle channel. It bounced off of it. Today, we see trading higher off of that. That's a very, very bullish sign. And that's something that we often see and enter a trade on when we see that pullback to the middle and then trading higher. That confirms the resumption of the previous bull trend and indicates higher trading from here. So that's why I really like Expedia and where it's at today. Of course, additionally, it's not currently overbought. It's below that upper Keltner channel, meaning it's in the buy zone. So it's a good day to enter as well. So I am looking at a debit spread for Expedia. I'm going about a month out with the October 31st options, and I'm looking at the 200 to 10 strike spread. Now, the price just jumped, unfortunately. It was trading at around 805 when I was looking before. Let's see. It's a pretty wide bid-ask spread, though. So I'm going to go ahead and I'm going to submit an order. I know the midpoint right now is 818. I'm going to submit an order for 805, or let's do 810, because that's around where it's trading when I found this trade earlier this morning. And with that wide bid-ask spread, I could still get in at that lower price. So I'm going to go ahead and submit that order and I'll just let it go and I'll see if I get in today. But that is my trade for today.
Yeah, no, that's a great looking trade there too, Helaine. And like you said, the price for that one's been kind of bouncing around just a little bit throughout the day. So,
Yeah,
as Expedia continues to trade around, up and down throughout the day, probably still a decent chance you get filled at that 810 limit price right there. So great looking trade.
appreciate it.
And we do have a question in the chat from
Yes.
Linda. She was asking me about the Cloudflare trade that I put demonstrated here. So that one, Linda, the expiration date for that one was October 17th. That was the trade I took. It was the October 17th expiration for the Cloudflare options. And again, it was the spread that I entered was buying to open the 200 strike call and selling to open that 210 strike call. Um, so there's a question there. And one thing I did want to go ahead and post in the chat, everybody, I popped the link there in the chat. Excuse me. But the link I put in there is, if you really enjoyed, what we kind of walked through here in TOD Live, if you like coming to these sessions, seeing the trade ideas that Helaine and I put together, I actually have a video newsletter that I put together over the weekend. I call it my WPO or Weekly Profit Opportunity Newsletter. It's about a, short 8 to 9 minute video. And I do a lot of research over the weekends. I go and find, the best looking trade setup that I can find, for the next few weeks. And, I dig into it, trying to find the one that I think has the highest probability of becoming, a really strong winning trade. And I put together, a video newsletter walking you through exactly what I like to see in the technicals. I get a little more in detail than what I do here in the TOD live videos just because I've, a little more time, a little more of your attention there, of course. But, I'm finding that best looking trade that I can find out there in the market and putting together, exactly how I would trade it, how I'd look to manage the trade, a lot of great details. And I'm actually offering a great trial on this right now for your first month. If you haven't joined already, if you haven't checked it out, your first trial period, your first month is actually being offered for just $1. So you actually get
Wow.
4 weeks worth of these trades for just $1. It's a great deal. And actually the recent track record for the alerts I've sent it to my members, I think, Helaine, it's about 29 out of the last 30 trades I put out there in the weekly profit opportunity newsletter. I think about 29 out of the last 30 have given my members the opportunity to have a profitable winning trade. So
Well,
the
that's
trade's been working
amazing.
out really well. Would love for you all to check it out if you haven't yet. So I just posted the link there in the chat if you do want to check it out. It's been a really fun project of mine. I think the members are really enjoying it. And like I said, the actual trade alerts have been giving them a lot of opportunities to profit. So just posted that there. If you have any other questions, definitely go ahead and pop them in the chat. But yeah, Helaine, that was a great looking trade.
Thanks.
Expedia. It's exactly one of the kind of newer breakout emergent parts of the market. We've started to see, discretionary, start to really outperform, start to catch up. It's discretionary is definitely outperforming, those more defensive pockets of the market, which you love to see. It's exactly what you want to see if you want to have a bull market starting to move higher and start to have some more of that expansionary trading. So yeah, that's a great trade. I mean, the chart looked incredible first off, but it's right at the heart of where you want to see this market starting to broaden out. So
Thanks, Blake.
awesome looking trade there.
Appreciate
Yeah,
it.
absolutely. Well, Helena, I don't see any other questions coming in, so I guess that's all for the questions today. But folks, I did want to thank you all so much for
Oh,
joining us for today's Trade
one
of the
quick
Day live.
question. Sorry,
Oh,
Blake.
we did. Here we go.
You have a
Yeah, go ahead.
straight put or call. I think Blaine and I both did spreads today. Now, I mean, if you were to do a straight call on Expedia, that is something that you could do. Blaine, if it's okay if I just jump into this for a second?
Sure, yeah, sure thing. I mean, that would apply for mine too. Like you said, we both did in the money call debit spreads today, but
Yeah.
both of the setups we picked out, if you did want to have a little bit more of an aggressive, stance or aggressive positioning on the trade, they certainly both are setups that would work for that.
Yeah.
Probably, select a different option expiration date or something like that. If I was looking to take a more aggressive, just directional, call option purchase, but again, the trade I took today was a call debit spread, but certainly the trade fits all the criteria that I would look for, for selecting, a trade for a directional option purchase too.
Same here. And so for Expedia, if I were to do a directional call option purchase, I do the October 24th, and I would do, looking at the trading, I would do the 210 strike call, which is at 1833. So if I were to do just a call option purchase for Expedia, I do the October 24th 210 strike call. It's currently trading around 1833.
Yeah, so Helene, if you took that trade there, that would, put you in, cost you about $1,800 to put that on. Not a super crazy cost for, buying a good in the money call right there. It's about 14 points in the money, so not buying too much time premium on that one either.
Yeah.
So yeah, that's a really interesting looking trade right there. So yeah, like you said, Helene, if you want to have a little bit more aggressive stance, certainly both of those setups, are again prime candidates for a directional option purchase with a call too. So yeah, that's definitely a good option there too, Helene. So appreciate you walking us through that one.
Of course.
Um,
Oh, and Holland said to repeat the strikes on Expedia. So for the directional call, I would do the October 24th 210 strike call. And it's trading around 1833. For the debit spread that I did, which I will say I did get filled at 810, I did
Very
the
nice.
October 31st 200 and 210 strike calls. And it looks like it's trading right around 8 points right now.
Fantastic. And, Helene, too, just one further point. You probably wouldn't take both of those trades today, correct? You would probably take one or the other because, I mean, at least from just how we like to personally manage risk, we wouldn't want to have too many trades on for the exact same stock or, even
Exactly.
stocks that trade very similarly in similar industries, things like that, just for diversification purposes. So, Helene, you probably pick one or the other, right?
Exactly. That's right. And it depends typically on how much money I have to allocate in my account personally. So the spread was $800, the call is 1,800. Today I had a little bit less money in my brokerage account ready to be allocated, so I went with the lower cost option. I did the spread. But that doesn't mean, as you said, that I would not do a call. Just given the day, I might have done a call option purchase if I had a little bit more capital to spend today on a trade.
Awesome. Yep. Yeah. I appreciate you explaining that. So, um, I think that's all the questions we have now. I think that answered them all. But hey, folks, thank you for putting in questions in there. I always love when we get to interact with you all and answer your questions, engage. So I appreciate you putting the questions there. And just know you're always welcome to put them in there. Anytime you're in a TOD live, we always love to have you here live in the room with us. So again, thanks for being here. And yeah, if you ever have any questions, whether just a basic strategy question or a question about one of the trades you just walked through, just don't hesitate. Just go ahead and put them in there. We're happy to answer those questions for you. But that is about all we had to share for today. Great session today, Helaine. Everybody,
Thank
thank you so
you.
much for being here live in the room with us for today's version of TOD Live. We are going to be back here live with you this coming Thursday, breaking it all down. There's probably going to be a lot of market action between now and then. It's definitely been an active past couple weeks, so we
Oh yeah.
probably anticipate that continuing. With the market being so focused on rate cuts right now, and with every incoming relevant data point, it's probably going to be reacting quite a bit. So we'll be here breaking it all down, telling you what's moving markets, what to keep an eye on. But until then, thanks everybody so much for being here. Hope you have a fantastic week, and we're looking forward to seeing you back here on Thursday.
Okay, see you all Thursday.
Yep. Take care, everybody. Have a great week.